Hello, Aman. Thank you for joining this wonderful morning or afternoon for you. Question, how are the Celtics doing? I don't know if do we start there or we don't?
We went to the game Monday night. For those that haven't seen yet, spoiler alert, two straight losses with 20-point leads, and it's tragic. But
I'm sorry.
still the favorites to win the Eastern Conference somehow. So
As a native Clevelander, I think yeah, we're struggles. So I don't know why I even started here. Okay, let's go into, e-commerce
more
stuff.
positive topics, yeah.
Aman, I've known you for many, many years. I've tried to sucker you into buying software from me many times. I've been a customer back in the day. I just found out we weren't friends on LinkedIn, but we've now accomplished that. So I feel like we've taken our relationship to a new level.
That's right.
I'd love to start. We're going to talk about tariffs. We're going to talk about like running a business today. We're going to go into your tech stack. We'll go into a lot of stuff, but I really want to start with like a proper introduction to yourself and the founding of Ministry of Supply, and then I'll have a bunch of follow-ups. But yeah, please.
Yeah, that sounds great. But first of all, just to reciprocate everything. So grateful to be here on the show and to see you and get to be now finally a customer of your product is an extra bonus. But thrilled to be here. A quick background: my name is Aman Advani, founder of Ministry Supply, and a Boston-based clothing company. We're 99% direct consumer, and we've been up and running for over a decade now. So men's and women's super comfortable clothing. Quick plug, ministryofsupply.com if you want to go check it out. But beyond that, an avid performance marketer by where I find joy, and then the rest of it is a bonus.
Give me the founding story. Like what prompted it, and then like what's
Yeah.
defined what you
So
guys?
quick
Yeah.
background, like grew up in Georgia, went to an engineering school undergrad at Georgia Tech, and then went to consulting, which was just kind of the next obvious choice, right? We just could go and learn a lot and kind of get your butt kicked a little bit. So getting on a plane every Monday morning, every Thursday night, I'm sure you've lived this lifestyle at some point, and your clothes just get absolutely beat up. And as a young, like 22-year-old consultant, I'm like getting back to the hotel, throw on your gym clothes at 8 p.m. and go back down to the lobby to work with the other analysts until like 2 a.m. And that's when the real work gets done, is when you're like, lounging and cranking, right? And so it's like, why can't everything just feel this good, right? Why am I wearing this really crisp Brooks Brothers shirt that's wrinkled anyway within a couple of hours, and sweat stains and dry cleaners and hotel irons being hacked for steam showers and all this kind of stuff. So I actually started just cutting out the soles of my socks and sewing in Nike insoles instead. So I would get these kind of running sock cushions into these like $600 gold toe socks. Anyway, long story short, I come to MIT in 2011. I meet Gihan, my now partner, and and he's doing the exact same thing with dress shirts, cutting out the center back panel dress shirts, replacing them with running shirt material. He's a world class runner. And we said, well, we should just do this, right? What is performance professional? What is work leisure? What do these things mean? And how can we make an entire category? So that was 2012, 2013. By 14, we were really up and running. And, it's been over a decade of cranking on the exact same thesis since. How do we make people really comfortable, but still look sharp and ready for anything?
And you started your career at Deloitte, correct?
That's right. I did. Yeah, yeah.
Okay.
2007 to 2011. So I
I
got a
think I
few good
forgot
years in
about
there.
that. I was
Yeah.
04 to '08 at Deloitte. So
Yeah. We
obviously
overlapped.
great. Some of us are better at Excel and doing work. E.g. Mod, who's good at numbers. Um, Thank you. All right. So you've been around. You are one of the like real brands that everybody knows about, has heard about. What's it been like operating the last couple months? Like tariffs just
Yeah.
popped up. You heard about it. You were like, is this happening? Is it not happening? Just walk through your experience.
Yeah, we tried to like find a comparison point in our careers to be able to like benchmark off of and say, does this feel like April of 2020 or May of 2020, where everyone's kind of scratching their head and saying, how do we handle this? How do we operate into this? Is this a new normal? Is this going to be here for 2 weeks to slow the curve, 2 weeks to end the tariffs, right? Like there's some parallels going on here, but it's actually entirely and wildly different in that it's actually much more polarizing. Where I think in early pandemic, it was everyone against the pandemic. In this case, there's a lot of wild mixed emotions and fears and concerns, and right now, at least, a definitively negative economic impact that impacts buying power, liquidity for investors, liquidity for customers. Um, and while there's still obviously a big cohort that's wildly supportive of the tariff approach and kind of feel pain to feel better later. And so for us, like we're trying to take all these feelings in and figure out how much do we wait and see, right? Where in COVID, that probably wouldn't have been a good strategy in hindsight. the quicker you acted, the better off you were. How much do you just kind of simplify your stack and focus on agility so you can change and see what happens? But all of this right now, I would say like the number one thing is every time I try to say, here's what we're doing, it changes a few days later. And so this kind of wait and see approach is starting to expire. And at some point, you just have to take a bet on what the world will look like in 6 months and build towards it. So we're right at the tail end of I can handle the instability and I can kind of fight my way through it and make a couple of good decisions, and to having to put your feet in the sand and say, this is where we stand.
I want to double click on a couple parts of that. You mentioned kind of,
Aaron, by the way, my favorite corporate jargon is double click. And by that, I also mean like, real, you've really made it when you go with double click.
my kids aren't going to understand double clicking. They're going to have like glasses and they're going to like twist. I was like, I'm going to twist my thumb 3 times and that's how I'm going to like go deeper into the topic. So let's dive in.
Dive in, drill down.
Yeah, okay. This is gonna be bad. I'll go back to my like watch brand from a while ago and I'll do all my like watch puns. This is gonna be very fun. I will stop being focused on our conversation and start thinking about what I'm saying next effective immediately.
The more jargon, the better.
Yeah, that's right. You talked about consumer sentiment and like people, right? Liquidity for consumers, but there's also the like, can you get inventory in? I kind of want to separate those.
Yeah, yeah.
Let's talk about the consumer side first. Are you seeing people willing to spend less already, or is this more like you're seeing it happen? And what are you hearing from other operators? Because you are super connected, and like I know you're talking to folks.
Yeah, I got a text from a couple of clothing brands here in Boston 5 minutes before this recording that said, "Hey, do you want to join a Signal chat where we're talking about how to overcome tariffs?" I'll probably jump in there and respond to this and say, "Count me in." I think we're all trying to figure it out together. I would say from a consumer standpoint, two things we're seeing is one is an unwillingness to pay more doesn't necessarily mean a necessity to pay less, right? So if you want to separate, there's three choices: there's lower prices, same prices, and more. We have largely counted out the more route as saying it's probably just a non-starter, right? Like elasticity is not where you want it to be right now. And so let's put that out. If we can keep stable and absorb the additional costs, that's best case scenario. We have to find other efficiencies to get there. But what I will say is that customers, and I know this sounds a bit in conflict, but I'll tie them together, is that customers are increasingly seeking a deal. And again, I remember this very well from actually 2022, 2023, when it was kind of the end or the middle of the bullwhip effect from COVID supply chains, where people just had a ton of extra inventory and they needed to get rid of it. Your entire ecosystem was, splattered with 50% off site wide, kind of wild, cryptic messages from founders that said, we need to move stuff now. And I think that's kind of what we're seeing now, and maybe not quite to the same extreme, but you're seeing a lot of kind of odd behavior in the competitor set and peer set in our cohort, where you've clearly got some weird inventory shifts, inventory being held, too much inventory, get the inventory out before tariffs, before de minimis. So this volatility that leads to a discounting mindset is becoming pervasive. Whether it's pushed by the brand or pulled by the consumer, it's hard to discern, but both are happening and it's hard to escape.
One of the things that's been confusing to me, and again, I'm no longer the brand owner, so I don't get to, like, I'm not thinking about this inside and out, are the brands who have conviction that their pricing is about to go up, that it's not tariffs are going to disappear, but like, hey, look, we're going to have a new normal. Our expected value is 25% higher COGS, whatever it is, but that they're immediately discounting as if the price of their existing inventory is what they paid before, not the like replacement cost of new inventory.
Yeah.
Very confusing to see. And so I can't figure out if it is just like the operator led and be like, oh, this is cheap inventory, let's go sell it.
Yeah.
Without processing, or if it is that consumer side. Yeah.
Aaron, I think you're right. I would just say like you've got that's someone who's got cash who thinks like that. Take off your income statement hat, put on your balance sheet hat, and say, how do I pay for all this stuff that's about to come in?
Yeah,
that's sitting at the port, and I need to get it out, right? And that's cash flow, right? So working capital constraints are massive, and all of a sudden your working capital needs just went way up. Whereas the first place you grab, well, your inventory is a nice little asset, and so I think there's certainly a conflict between optimize for balance sheet and optimize for income statement. And right now, at times like this, I find people tend to be much more balance sheet thinkers.
Yeah. So you're allowed to talk about balance sheet and bullet effects, but I can't say double click. I just want to.
Mine was productive. Mine was useful.
I'm just saying useful things. We'll put that.
Yeah. Can you edit that out?
A couple of months ago about return policy. I feel like you've already been on top of this for a while, which is like, and I'm gonna say it wrong, but I want you to like kind of go deeper on your thinking. Um, but like if somebody buys something at a discount more than 20%, it's either exchange only or it's some right, it's no longer free returns. Can you walk through your thinking on that and if any of that has changed with the kind of
Yeah.
new environment?
I think that's right. So our short policy is, heavily discounted items are eligible for exchange only. There's still a final sales section.
Hmm.
We now also charge a small, return label fee, which, for years we didn't have, right? These are kind of small ways we found to make sure that we can at least start to tighten up, right? So we're not kind of bleeding in this particular this interim period where tariffs are spiked way up. And it's something I would encourage, any brand owner to consider is that like what we don't want to do is in any way hurt the average transaction, right? So someone comes in, they buy something, they love it, they keep it, and they fall in love with the brand. That's the transaction we need to protect, right? Platinum customers who are around for a while will be, they're waived from almost every rule. They can kind of do whatever they want, and that will stay true, right? These are people who we really, we exist because of them. But something like a small return label fee, which is, becoming the market norm, allowing exchange only, which kind of keeps you in our ecosystem, are small ways that you might be giving up something small that's incredibly valuable to us, right? The right to return is a very expensive right, but it may not be that valuable to you, right? So there's value created when we limit that right in some way. We claw a little bit back, but you also get the benefit of us not raising prices or being allowed to offer a big steep discount. So what we're trying to find is like where do you grow the pie? How do you help the consumer get what they're looking for at the same or a better price? Um, by looking at the entire ecosystem, not just raise price by X. Yeah.
I like that framing. It's almost a game theory type of thing, which is like, look, if we offer free returns and people started returning all the time, everything, or they wardrobe or right, like they buy six things to only keep one, what that actually does is it hurts our bottom line, which means we raise prices across the board. So we just want
Exactly. Yeah.
people who are like actually committed to
Yeah,
engaging.
yeah, yeah. I mean, this is like it's Southwest Airlines, right? It's saying let's and the core product will be the best price we can make it, and then the frills, like the right to return, may have an additional cost, right? And so I think it allows customers to, I think, have a little bit more power of choice on saying what type of customer I am, instead of saying I mean, free returns. Everybody bears the cost of free returns, right? Whether or not you returned. Charging a $7 label fee only, means the people who are taking advantage of that service bear the cost, right? And so I think that's another way to think of it is think of it as like a baggage fee instead of baking it into everyone's ticket.
Yeah. That's really interesting. I want to I want to go back to supply chain still, but not yet. I want to stay here because you mentioned something that is pretty interesting around platinum customers. Um, I'm curious how you like maybe segment out your customers. If you use any tools for this, if you guys use loyalty points, like what's your either your tech stack or just like your process stack, for lack of a better term?
I'll double click on that. It we've used Yotpo for years. We love Yotpo. I enjoyed having coffee with Tomer a few months ago, and he was a gem, and that was a wonderful reminder of why Yotpo is a big part of our stack. And it was, one nice thing about that is we spent a ton of time a few years ago really setting up a bulletproof rewards and loyalty program, and actually have largely set it to forget it. It's quite good. Yadpo still comes to us and says it's performing well. People really love it. Engagement levels are high. So in that way, I think we've relied on the rules we set in Yotpo for what our loyalty status would be, and we have our platinum customers who are our highest tier, who get, again, when we see it's a platinum customer asking for anything, we're going to do our absolute best to go out of our way to make it happen. That'll be true for any customer, but certainly we'll break a rule or two here or there as we need to.
I love it. All right, I want to talk about supply chain. Tariffs have happened and they're different kind of country by country. You guys produce somewhere in the world, you've diversified maybe at some point, or you're thinking about that. Like, what are the decisions that you're making right now? Even if you haven't made them, what are the like things that you're noodling on, and what are the
Yeah.
choices you're thinking about, given the uncertainty?
Yeah, yeah. A couple big things I'll call out. One is moving our warehouse from Mexico to Pennsylvania, and kind of giving up entirely on the de minimis 321 exception, which we've relied on. Many have relied on for years. For those who don't know, that's duty-free imports to the United States for packages under $800. So a ton of your favorite brands, whether or not you know it, are doing the same thing, and it's kind of institutionalized in our space now. we're just kind of proactively saying we don't think that will come back at least anytime soon, and it's a quicker and safer bet to just take that leap. So that's a huge, huge, huge shift that causes short-term pain on double shipping, on moving, on paying import fees, tariffs up front. Whereas if you're in a bonded warehouse or a Mexican warehouse, you pay it on the back end. So there's a lot baked into that from a working capital perspective.
Let me stay there for a second. So
Yeah, yeah,
ignore the like fixed cost of, okay, we had stuff in Mexico, now we move it to the States. So 3 months from now, now you're based out of Pennsylvania full
yeah,
time.
sure.
What is the difference in like moving it to Pennsylvania versus what you could have done before moving it to Mexico? Like, what's the actual like dollar difference? Is it on your COGS? Is it on the consumer? Like, where's that impact felt?
Yeah, so keep in mind if it's in Mexico, even if we are paying duties, right? So orders over 800 previously, now any order, right, will come in on duty. A huge difference is just to consider from a brand lens, from a working capital lens, is you're paying that when at the time of sale, that order crosses the border and you pay that duty, right? Now, in the new world, when it's in Pennsylvania, you're paying at the time of receipt. So the second you get it, let's say you've got 3 or 4 inventory turns a year, come 90 days of supply on hand, um, you're potentially holding that, you're paying that 90 days in many cases before the customer pays you back for it. So there's a huge working capital shift there. But again, remember that tariffs are just, if you have a $100 item and it costs you $50 to manufacture, and now you're paying a 50% tariff, that 50% tariff is on the $50, right? Not on the 100. So you're paying a $25 extra fee. That has to come from somewhere, right? And there's a lot of people who can absorb that. The customer ideally is the last one that you're trying to avoid paying that. But you have other vendors, you have your suppliers who you can come back to and try to claw back 10 of that 25. You've got your sell side vendors, right, that you can kind of start to find little wins in. You've got your advertising partners. I think Meta and Google will certainly see impacts there. So there's a lot of places to find that 25, but I'm calling that out as a fairly real example. Is it's not 10, it's not 5, it's not 3. It's a material sum of money that has to be sorted.
So it's interesting. So if you're talking to other operators, right, let's call it like an operator 10 million, 50 million, $100 million, right? So not the guys with an insane balance sheet and not the really small ones who are kind of figuring it out. Is a big opportunity truly to go back to your factory and be like, look, now that our costs have gone up, but to your point from earlier, there is no higher willingness to pay. So if you want us to continue working with you, we need you to shrink our price or share some of the cost or, right? Are you like trying to build in longer term contracts or what? Yeah.
Yeah, it's such a good question, and this is what the signal chat was, is about. This is what everyone's talking about. It's kind of where are the first 3 or 4 levers you pull. Ideally, all of those are before you revisit pricing, right? No one wants to change prices. No one is doing so willingly. We all kind of like the world we've built before all this. So the first place you go is back to your suppliers. Now, when you asked the question earlier, what are you doing about all this? The two things we're doing is we're working with our existing supply base, who we generally love and want to stay with as long as possible. But we're also now pushing for an 8-week supply chain. So we think the only way to win in this kind of volatility is through agility, right? And so how do we get to a point where if we need to move our footprint around on short notice, if we're seeing interesting, weird demand signals from a very spiky economy, we can order into or out of some of those trends. If we're seeing seasonality hit earlier or later, big discounting culture, we want to tighten up a little bit, giving ourselves that ability to say, let's go for 12, 13 inventory turns a year, which is wild, right? We're placing POs every 4 weeks and starting next month. And so I think the answer to a lot of this is saying don't commit to a footprint, right? Whereas in the rest of the world, we're saying consolidate, focus, commit. Here we're saying don't commit, leave yourself a little bit of room.
Are there changes that you're making or thinking about making that you think, let's assume tariffs go from, 50%, I don't know the latest, but 50% Vietnam and 125% China, whatever it is, right? For like where most people are producing. Let's assume they go down to 10% or 20% or something that's a marginal increase. It's not nothing, but
Yeah.
de minimis is also gone. So your costs are going up there.
Right. Yeah. I was going to call out both of those are coexisting. Yeah. Yeah.
Both of those. Are
Yeah.
there changes that you're making now as a business owner that you're actually like, okay, I'm taking my medicine, but actually for the long-term viability, once we get to a steady state, this will make us a better company, a more sustainable company? Or is
Yeah.
everything you're doing much more like, shit, I've got to do it right now, and then I can't wait to undo it?
Yeah, maybe the better way to answer this is like, if none of this has happened, we should still do X, right?
Yeah.
If, in the old world, we should have still. And I would say the 6-week or 8-week supply chain is a win no matter what. It means lower inventory costs, holding costs, and lower obsolescence, higher stock in rates. So like the benefit of a fast, agile supply chain is timeless. and
That does signal
situationless.
that your supply chain can handle it. That you've got a factory that's willing to
Absolutely
work
right.
with you and be like, we'll make more money in the long
Yes.
run.
Yes, absolutely. Smaller order sizes because you're ordering more frequently, right? They have fixed costs of starting the line. So yeah, absolutely, you're right that if we can pull it off, but it is for the brand, all else equal, your margins are equal, everything like that. It is a timelessly good decision to shorten your lead times, right? And so pursuing that, absolutely. Now, would we have moved back to Pennsylvania in a world where de minimis still existed? No chance, right? That's a defensive move, right? Where we feel like we have to minimize the unknowns really is what we're trying to do. We're trying to find stability here. So I'd say it's probably a mix of like, hey, this was a good kick in the butt to do something we should have done anyway, combined with probably, maybe it's 30-70 combined with defensively, oh shit moments of how do we handle this and what do we do, right? We just ran a monster warehouse cleaning sale to get as much out of our system as possible before a lot of these changes took effect, and that's all zero or low margin sales that hurt. They reduce the customers' understanding of our value proposition. They cheapen the brand. They move good inventory at bad prices, right? So these are things we've done defensively that I regret, but wouldn't change.
Okay. That's really interesting. I want to stay here on the like how you're managing the business. Um, are there metrics that you're tracking today that you weren't tracking before, or is it still same? Like if you have 10 minutes and you're walking, I'm on your board and you're walking me through a dashboard, like what are the core things that I should care about?
Yeah, so now we're trying to, where I would say metrics haven't changed, the aggressiveness with which we are pursuing them and the tolerance and patience for missing them have changed, right? So we're still looking at MER relentlessly, right? What is our marketing efficiency ratio? And that's really simply put, total marketing dollars above total revenue. You have a $10 million quarter, and you spent 1.4 on ads. You have a 14% MER, right? Just to break that down simply, our tolerance for missing that kind of target, that actually happens to be our percentage target, is right in that 15. Keep it under 20, and we're okay. Ideally closer to 15% range. And the need to stay in that range says, look, if we were having a bad month and sales were slow and we wanted to kind of ramp them up a little bit, we might say, hey, you know what? Reduce our expectations on your marketing efficiency ratios to get some sales up and keep the engine turning. That tolerance is gone. You know what? Have a bad month, but keep it efficient. So I'd say places like that tend to be where your ability to absorb lumps disappears. Your buffer space goes away in situations like this.
Um, Same type of question with supply chain is like that to me requires a lot of agility to say like, okay, cool, we're 15%. I actually think we're going to creep up to 18% right now. So stop X. Instagram, like some decisions that you're making. How is this say like you're checking this on a daily basis and like moving your ad spend at a place where maybe before you're doing it weekly or monthly or what other like literal day in the life of a Amon operational changes are you having?
Yeah, I mean, what it meant also is we tend, in general, we kind of we somehow say we sat out from an advertising standpoint. I don't know if you can hear my cuckoo clock in the background. Sorry.
That's great. That's very sweet.
Um, and a little red bird for you. Is that from an advertising standpoint, we kind of jokingly said we sat out the quarter. We pulled our ad budgets back something like 50% year over year, just because we wanted to kind of really rebuild the core.
Yeah.
And in doing so, we used triple whale for attribution. We decided to really use the tool to figure out where to put our money. And the tool suggested that we should really be focusing a lot more on just Meta and Google. So put aside a lot of the direct buys, put aside a lot of the third through 10th, best marketing channels for us, affiliate, paid stuff, right? And not to say that those are bad channels, but more to say like in comparison, we were better off consolidating on the paid advertising side. And so we did that and it worked quite well. It tightened up our marketing and marketing efficiency ratios year over year is quite a bit better. And so that's where we just need to kind of figure out where do we consolidate and focus versus where do we diversify and test.
And so is that when on the paid side, do you think about paid purely as like top of funnel, or do you also think about paid as middle funnel? And is that inclusive of retargeting and everything else?
Yeah, so that's I mean, our marketing efficiency ratios will naturally be inclusive of everything, right? That's all up. We do also look at if our marketing agency calls it BCAC, we would call it cost of acquisition, right? So kind of fully blended cost per acquisition, total new customers divided by total spend on new customers. Yeah, I think I flipped those two. But yeah, what is your cost per acquisition, and are you first purchase profitable, right? So are you making money in more GP from first purchase net of returns than you spent to acquire the customer, right? Simply put.
Interesting. And then you and I have talked a little bit, obviously, about like bottom of the funnel or like the retention side of things. How do you think about where your P&L has kind of been flipped upside down and you have this like big list of people who've heard from you in the past? You were kind of mentioning there's like concern that you've started to cheapen the product a little bit or the experience. Like, what are you doing for those people who've seen you in the past?
Yeah. Well, the good news is like the product is better than ever, which is this is kind of one thing that I would put a ton of credit on Gihan's shoulders and saying like at no point has he ever or would he ever make a product uh, constellation, right? Like, would he ever cheapen the actual product? Is that we're releasing a wild 3D printed blazer next week, and it's like I picked this thing up, and it was just heavy and dense and supple and beautiful, and kind of felt like a hug when you put it on. And this is the best product we've ever made, and I've said that way too often for people to believe me anymore. But I genuinely feel it, maybe a little bit of recency bias there, but the product itself is better than ever. So I think this is why our retention rate has done quite well over the past few years, is that as the product gets better, the first wear and the first wash, you realize, oh wait, this is the real deal, and I need more. And so that is our best case scenario: is you buy more and you tell your friends, right? Those have not changed. The cost of those has not changed, right? And the success rate has changed in a positive way. But I would say in this world of less top of funnel paid marketing spend, we do have to spend a ton of our time on, and I've spent a lot of time with you, Aaron, on fortifying our mid and lower funnel, and particularly the email and SMS ecosystem, which is our primary tool. There is how do we make sure that our communication strategy is impeccable, right? It's really, really tight and enjoyable for the customer.
Um, I'm excited to see the new product. That's cool how you described it. Those are pretty good adjectives.
Yeah, it's amazing. I would call it the 3D printed blazer, and it's wild.
That's pretty nuts, man. I mean, my
Takes about
brand,
90 minutes to print one, and they're made in New York on demand, which
that
is
is so
just
cool.
incredible. Yeah.
I think you know this, but like my brand that I ran for a decade ended up being a print on demand, and we would assemble everything in San Francisco. It's like we'd import components, but then we laser
Yeah.
print. It could be a photo of your kid, or like we did sports licensing, or we did corporate gifting, and then like
Yeah.
having the assembly factory in a very tiny office, like in Soma, right next to Pinterest headquarters. It was like this really cool thing, and you guys are gonna so enjoy the like actual
What a
active.
joy to not hold physical inventory, right?
That's
Like it's
also very
better,
cool.
but it's also better for the customer, right? That we have 100% stock in rate on 16 colors in 8 sizes, right? At any point, you can guarantee we have your size and color.
Yeah. I want to stay on this a little bit on the like content for existing customer side.
Yeah.
Um, if you have inventory struggles, right? And if you're like maybe have less new to talk about, so this may not be a Ministry of Supply thing, but imagine there are a lot of your peers who are really struggling, like, it's just going to be the same product. We don't have the cash to go bring in new inventory right now. We're just sitting it out. What would you do? Like, how would you talk to your existing customers? Would you just like stop and be like, I don't have anything to say. I'm not going to say anything. Would you have a drumbeat of your old like marketing talk? Yeah.
Yeah, yeah. I find that like there's ways to make sure the customers still feel the freshness of your brand and your approach. We do a lot of storytelling. We've got a Mother's Day, customer profiles we love doing, bundles, systems, discounts, promotions, mystery boxes, right? There's a ton of ways that you can kind of engage people on existing product, particularly if it's product that they will naturally own multiple of, right? So it's saying, hey, look, yes, just because we don't have a new white dresser doesn't mean the white dresser we have in stock is any way worse, right? We just need to be there at the right time, right? So I think there are brands that are much more push oriented. Hey, check out our product, you should buy it. And then I think we think of our brand as much more pull oriented. Hey, I'm in the market to buy new travel or wear to work or commute, gear, and I need it. I'm going to come to you, right? And so in that way, like new arrivals don't matter nearly as much as just have the core stocked in. And so this is our kind of constant fight is restock emails do as well, if not better than new items, because you got my size back and I've been waiting 2 months for that. And I'm thrilled and I've been on a wait list to get it. So in that way, I think that probably varies a lot by category. But for us, I think we're very fortunate in that new doesn't always mean best.
Sure.
Sometimes people just
Um,
want restocks.
I'm always trying to learn different parts of the tech stack. Do you use a specific tool for the restock email? or is that just
Now we just use it's a native app in Shopify. So
okay? There
one
it
of
is.
the things we did, we replatformed a little less than a year ago from a headless Shopify Plus to a native, and that has unlocked our ability to do so much of this kind of little, right? The Shopify app ecosystem is broad, and it's our ability to kind of flip stuff like that. And we were using a custom kind of back in stock app that we made in the old version, but now we're just using a stock app.
Are there what's your like request for startups? What are the next set of problems that you're trying to solve? And it doesn't be a startup, but like what are what do you want to fix next, or what is pretty good, but there'd be great leverage if it became excellent. And if you think about the
Yeah. Yeah, we've been really diving into this idea. I know it's such the cliche kind of drum to beat, but personalization, right? And I think this idea, I think someone used a phrase like a campaignless future, right? So how do you truly have an experience starting from the site all the way through the purchase and every email in between is one to one, right? Is truly created for you, right? Your site experience is curated for your local weather or any other information the company has about you, and is only stocked in your size, and is kind of with testimonials of people that are your body type, right? And then through the entire flow and journey, saying how do you make sure that information, how do you make sure that information that's being served to you is relevant to specifically you, right? Not your neighbor. And so I think the closer we can get to this world where like your feed is yours and yours alone, and that there's no two feeds that are the same, is really exciting. And I think there's a lot of little pieces that are getting there. I think Orita's doing a lot there. We're working with a company called Revamp to put some of this stuff in there. We've got a ton of partners who I think are really thinking about a very tightly tailored and custom or personal journey that should start from minute zero.
I love it. I had a call with Revamp 2 days ago. Those guys are great.
Yeah, it's
He
fascinating.
he
We're going to
reached out.
get live.
I'd never met them, but I referred them to an agency, and then the agency started using them. And then he's like, "Thanks," and I was like, "Yeah, man, I heard you were cool." Like he's like, "What do you guys want?" I was like,
Yeah, actually, we know Logic, who's our email agency we really love, and I would plug to the end through Arita, through you.
"Yeah,
And Logic introduced us to Revamp.
that's
So I
great."
guess that was warranted, right?
There it is.
And that,
Those guys,
yeah,
yeah, Logic is incredible. What a
yeah.
great group. Okay, I want to start winding down. I'm going to give you a little grace on this
Uh-oh.
unpack.
Uh-oh.
I'm just super bored and like I just want to.
No,
No.
I get it. I get it. I'm with you.
I do want to see the cuckoo clock come out again.
You
Um,
gotta wait another hour.
what we're gonna get through the next couple months, maybe, probably. It seems like we'll get through it. What is the next step for Ministry of Supply? We have a conversation 2 or 3 years from now. Like, what are you hoping to be building during this time, or what's changing, or is it more of the same, just bigger and better?
Yeah, no, I mean, there's a different answer for kind of 5 year view versus 6 month view, right? And I
Let's
actually
talk
can't
about
wait.
let's talk 5 year. I'm super curious. Yeah.
Good. Well, I also want to spin this question back to you because I had been meaning to talk to you about that for a while. And I'm very curious to see where Rita will go from here. But if we talked about the 5 year view, man, there's such an exciting opportunity for us with tailwinds on. Over the last 5 years, people had this really wonderful realization where if they were extremely comfortable, they were both happier and more productive, right? It wasn't actually a trade-off as we've been told for generations. And so we have this amazing tailwind of people saying, I'm demanding this kind of comfort, joy, productivity Venn diagram to coexist in my life. And so we get to do that, right? We get to think fairly wild about what could that look like, right? What does that feel like? What does that, do? So I think we want to completely own the first 5 minutes of your day that's our space, right? Where we want to be thinking about ministry supply in your morning routine and the joy and how that will impact your desire to walk to work instead of drive, or your desire to play with your kids in the evening instead of changing back into your pajamas or gym clothes, right? And these little ministry moments, we call them, are what we need to own. So I think it's product. Everything else I want to be best in class. Product, we need to be first in class. So that's where we will put all of our energy over the next 5 years. Now I'm going to spin it back on you.
That was really great. I'm just thinking about in 5 years, my kids will be 12 and 14, and they're not going to want to play with me. So, I'll have
We'll hire them as interns, unpaid.
It's unpaid interns. That's fine. That's
Yeah,
fine.
yeah.
I'll give them $10 at the end of the week. Be like, congrats.
Yeah.
What you're spinning it back on me? Like, where are we going?
Yeah, I mean, I've talked to you so much about, and I've enjoyed. For those that don't know, when Aaron approached me about Rita, I we grow such a good friendship over time that I said, whatever it is, I
Yeah.
can't wait to hear about it, but I'm in.
Well, I
So
couldn't
I
suck
didn't get
you
to ask
in.
these questions. I
All
didn't
right, I
get to
couldn't
ask
suck you
these.
in to be a customer to Passport Shipping when I found it in 2017.
That's right. Yeah.
It like
Yeah,
took
we are
many, many
now.
years and many companies. You were already a customer, I think, at Loop when I was
That's
over
right.
there. So
Now we're Passport too. Yeah.
look at, yeah, there it is. Great. You go back to my old watches. I've got a bunch in the closet behind me. Um, Look, it's really interesting. We actually have a company that just popped up that is like competing with us, but they're competing with us with like interesting stories about like, yeah, we're going to guarantee some ROI, but it
Yeah.
is more of the same of what's happening in the ecosystem, which is when I was a brand owner, I would send a message to every single person every single time I sent an email. Okay. I
Yeah.
love MailChimp. I wear my MailChimp t-shirt all the time, but I was like, yeah, we've got this baller product. Aman hasn't clicked on the last 26 emails. He should click on the 27th. Like this is the one. He's going to do it. Everybody's realized, okay, cool. We need to go into segmentation. And the thing that has been really interesting, and this is something that I learned at a level of depth that I never would have without my co-founders, without DB and Zach, right? Is everything that a brand is doing right now in terms of like getting smarter with segmentation is still focused on recency. So it's
Yeah.
like, oh, did somebody click in my last 90 days? And the framing isn't did somebody click in my last 90 days? The framing should, right? And like what people are really trying to solve is like, who wants to hear from me right now? And the
Yeah.
tools that people have are just like, they're not good. Like this new company that's coming up, they're like, yeah, we'll score everybody. And it's like, but what are you scoring them on? You're still scoring them on the same old, same old. And so it's like you're repackaging something and you're making it work. And like that is cool.
Yeah.
The question that we are wrestling with is like, and you even mentioned this, like there are all these amazing attribution tools. And it's like, okay, cool. X% of my revenue came from email. Think about the last thing you purchased. Do you have any, like, could you really say, oh, it's because of this? Or is it likely maybe you sign up for the email to get the discount or you want the abandoned cart flow or something, but like you heard about it because I texted you, I was like, oh, check out this cool thing.
Right. Right. Right.
And it's like this mishmash. And sometimes it is, especially on the retention side, you are that customer and you just need to see the next thing or they need to hit you up at the exact right time with the right message without being super annoying.
Yeah.
This is a word salad. What I'm trying to get at is like the
Oh no,
place that
and not hit you up at the wrong time, right? Just as important as hit you up at the right
yeah,
time.
when you
Yeah.
hit you up at the
Yeah.
wrong time, you unsubscribe. If it's a
Right.
brand
Right.
like
Right. Right. Yeah.
we've moved up market very, very quickly, which is cool because like we're ML team and like the more data, the more impact we have. Um, the thing that has become very apparent to me when I talk to you guys or I talk to Evereve or like some of our enterprise brands is it's like customers who are on your list aren't angry with you. They're not clicking spam. They're not clicking unsubscribe. They're just apathetic at some point.
Yeah.
And like
Yeah.
that is a big issue. Like there's an opportunity cost of an unsubscribe, but the apathy is you'll look at almost every brand right now, and over the last year, their click rate has just like slowly dropped. It was like Gmail changed everything a year ago, and it felt scary. And everybody's like, okay, cool. We actually made it through. We've shrunk our spam rate. We're good now. But it is compounding on a negative side.
Yeah.
So what
Yeah.
we want to do is we want to move away from this attribution side of things and move into like everybody should be thinking not only about, but kind of only about incrementality. If I send him on this email, does it move him closer to a sale? If not, do not
Yeah.
send an
Yeah.
email.
Yeah.
And
Yeah.
like, if not an email, then a text. If not a text, then direct mail. Like we partner with Postpilot on direct mail. They
Yeah.
are
Yeah. Yeah. Yeah.
awesome.
Yeah.
We get to be this data science layer on top of it. And so
Yeah.
like the world that we're looking at is there's this insane amount of data. We just signed a brand that is like literally kicked off yesterday that it doesn't matter. I'm not gonna say what the brand is, but on a daily basis, we are processing, I think 1.5 billion data points to refresh their model. We have another brand in our pipeline that I think is going to close that's like more like 3 or 4 billion data points. And it's like most of those data points don't matter. This isn't like it's not a big number to like
Yeah.
show
Yeah.
up.
Yeah.
It's like
Yeah.
you don't know which ones do. And
Yeah.
so the challenge for us is just like how do we go help brands take advantage of all of their data, not some like BS people clicked, they didn't, they purchased, they didn't. It's like there's so much more to see. Anyway, so
And I
our
know
vision
I know
is
time
like
is tight, but can I ask you two follow-on questions?
yeah,
Very quick ones.
this is great. I wasn't expecting, so I just rambled.
No,
Our
I
vision
like
is
it,
to
but
be like
I'm
a CMO's best friend. Is that's it? It's
yeah.
like if she has a list, how does she get the absolute most out of it? And sometimes you get the
Yeah.
most out of it by not sending the message. That's actually the
Yeah, yeah,
optimal.
yeah, yeah, yeah. No, it helps the ecosystem. Two very quick ones that I just want to plant, and you can answer them now
Love it.
or sometime over a coffee. But um, what about further upstream, right? So you mentioned mail, email, SMS, direct mail. Like, what about custom audiences, right? Like, I constantly worry that we're advertising to the wrong people who are not ready for our product, right? How do we start to really think about this as a full funnel, right time type of approach? And then the second question, which is related, is there a world where people in the Orita ecosystem benefit from each other being in the Orita ecosystem, right? So I know that Aman is in a buying mindset right now. Let's send him with an email from our other friends.
Yeah, those are good questions. I think philosophically, the right next place for us to go is retargeting.
Yeah.
I think it's still like, how do you get the absolute most out of your existing list? Because
Yeah.
where P&Ls have been turned upside down, we've actually been scaling during tariffs. I was very, like, again, having been the brand owner, I was like, something's wrong, shut everything down. I don't want to think about it. But it's this realization of, why am I spending money on acquisition of new people who don't know anything about the business if I have yet to like maximize what I could do for my existing customers? Not like what I can get out of them, but how I can expose them to the amazing products I've built. Right.
Yeah. Yeah.
And
Yeah.
so some people who are shrinking like you did from 10 different channels to Meta plus Google are then like, okay, cool, but I have this installed base of people who like have shown some inclination. Why am I like, let's go get the most out of them?
Yeah. Yeah.
Retargeting to me is actually the right next step. It's not about lookalike audiences.
Yeah.
Oh,
Yeah. Yeah. Slowly work your way upstream. Yeah.
it's just like, but we can do all of that also, and we have better signal. Like we are just like, we're we have a bunch of ML engineers and like data scientists. We don't have enough to like do it all. So like we are very much sequential, not in parallel with some of this. But yeah, I would see retargeting makes the most sense to me. In
I'll
terms
sign a 5-year contract right now.
of
I'm in.
done sold. The,
I'm in. I like it. I buy the
um,
vision.
Yeah, like I mean the vision's pretty it's not it's like it's a very simple vision. I don't mind sharing the vision. The hard shit is like actually doing the ML engineering, and like Zach and
Right. Right.
DP,
Yeah. Yeah.
they should be at OpenAI. If you're a company talking
Yeah.
about like segmentation and doing smart stuff and you don't have one ML engineer, you're not actually doing anything different from what Klaviyo RFM is doing, which is amazing, right? Like there are all these great tools
Yeah.
out
Yeah.
there.
Yeah.
Um, the question about co-op is an interesting one. So we theoretically could go figure out, okay, Aman is engaged with this brand, therefore like refer, like tell this other brand to do it.
Yeah. Yeah.
Um, there is a real concern around PII, and I think a
Yeah. I
one.
suspected that was the first place you'd go. Yeah.
And so you have to do it. If you do that, you do it as a co-op model, and it's like
Yeah.
properly opt-in. The
Opt in. Yeah.
way
Yeah.
we've built our models is like, and again, I'm going to say stuff as a history major in MBA, so I'm going to say it wrong, but is much more like it's an LLM, where like open AI, like ChatGPT will give you the right next word. It will say rainbow when it's like writing out the poem that you've asked it to write for you,
Yeah. Yeah.
right? And you're like, holy shit, that's right. But there is no author who said rainbow is the right next word. It's just like there's so much data that, okay, if I want to write this poem, this is a great option right
Yeah.
here.
Yeah.
We do the same thing, which is we don't actually know it's you, but we know based on hundreds and hundreds of very large brands who all have sent thousands of campaigns. So you have this incredibly differentiated data
Yeah.
set
Yeah.
of
Yeah. Yeah.
human engage with email, where it's like, oh yeah, this person is actually in market to receive email, not because she's in her inbox right now, but because people like her within this brand, where the brand has a 180-day buying cycle, but it's actually a 246-day email to buying cycle. Like today is the right day, all things being equal, to send her that email.
Yeah,
And
yeah,
so
yeah, yeah. Also, just highlighting that it is in many cases that long, right? Which I think a lot of people
yeah,
are shocked by. Yeah,
it's a monster. And so like
yeah,
we don't need to do the PII thing. Like could we get like like 40 basis points maybe? But it's just like
yeah,
why would
yeah.
we
You're right,
constantly do
right.
that?
There's a lot more opportunity between now and then. Yeah,
Yeah. But there's more coming.
yeah. Maybe by the end of my 5-year contract, we'll
Yeah,
reopen
that's
that one.
right. I think this is a technically it's signed live. Our pricing just went up. All right, I want to give you I feel like I want to give you a hard takeaway, but I don't know if I've got anything exciting. Um, all right. I'm just gonna ask, like, you're meeting with a random, you're in your new signal group, and there's somebody who's there who like you don't know, you've never met, but like so you're mindful of not giving them advice because you haven't inspected their business. But like, what is the unsolicited advice you would give to every operator who has like some level of cash, some level of inventory, some level of brand? So like
Yeah,
call it like
yeah,
a 10 to $50 million top line business. Like it's a real business, but they're just like they started when they were 22 and they had this vision and now they're in the thick of it. What is the unsolicited advice you would give kind of in May of 2025?
yeah. I've begun to think that kind of agility is the only real superpower.
Hmm.
In this business, like it's absolute dedication to your vision, right? And saying your why never changes, but your what and how are really nimble and can change on a dime. And so I think we had we one of our favorite factories, a group called Lever Style, and their chairman is a guy named Stanley Sezzo. Many of your listeners will have met him before, as he's out and about a lot. And Stanley has this phrase we like, which is asset light. And it's become a bit of a mantra for Gihan and I to say asset light, right? Watch your contracts, watch your leases, watch your inventory buys, watch your inventory turns, your inventory on hand. What are your commitments? What are your assets? What are your obligations? And keep those light so that if and when you need to make shifts, you can do so quickly, right? And we keep thinking cycle time, right? It's why I sign on every night, is to unlock partners on the other side of the world that are just waking up. One email might unlock their whole day. And that's 2 days of work to get done in one, right? That's cycle time. So the faster you can cycle, everything moves a lot quicker to where it needs to go, right? So when you're asset heavy and you're slow and bulky, your cycles are slow. And so how do you speed up your cycle time? You go asset light. So I know that was a bit of a dense and heady one, but it's one that Guion and I talk about a lot, and kind of really have focused in on, and saying, how do we stay asset light and nimble?
I think it's wonderful. I'm remembering back in 2010 when I started Modify, and I would every night stay up past midnight specifically so I could do not just one email, but two emails. Because I was like, if we can just answer the next question and the next question, we're done. Like
Yeah.
everything can happen the next day. And so that just in time mentality, the SLI mentality, the
Unlocks, right?
yeah,
Yeah.
that's beautiful.
Yeah.
Man, thank you. This was really fun. I appreciate you
Yeah,
taking the time.
likewise.
Remind everybody again, for the one person, my mom, who's listening, like where can they find you?
Aaron's mom, I'll send you a care package because you're Aaron's mom, and you gave us Aaron. But for everyone else, ministryofsupply.com.
They don't get care packages. Sorry, guys. All right, Aman, thank you.
Yeah.
This was a pleasure.
Thanks for having me, Aaron.
Cheers.